Hi, this is Brendan Jenks. I'm the investor coach in Kansas City. Thanks for watching. I was reading an interesting article today in the Wall Street Journal. This article is entitled, Pendulum is Seen in Swing to Stocks. And the blue line in the article is representing the Barclays Intermediate Bond Index. The red line represents the S&P 500. And as you can see, for this 12-year period, the author has picked an index, in my opinion, that clearly outperforms the S&P. So the inference that investors could make from this, and I want to caution you to be careful about this, is that, hey, the past performance for 12 years in this bond index is much better than the S&P 500. I'm putting my money there. Well, here's the big tip. Returns come from the market. So to capture as much returns as possible, you need to own as much of the market as possible. And you can't overweight it, or you can't try to pick a winner. Now, it's basketball time, and if you've picked a winner and they've lost, well, sorry about that. This would be another way that you could look at trying to pick winners. Do you see any discernible pattern on this sheet? The answer is no. And what this sheet is showing is basically 9 asset classes and their returns from 1973 through 2011, and it's showing the best performers on the top here over to the worst performers. So you can't tell where the returns are going to come from or where the best returns are going to come from. Now, I went ahead and did a little experiment, and I thought about this, and I know a lot of people, many of you possibly have done this. Think back to 2008. What happened in the market? Everybody got hammered. So most people took their money from stocks, moved it into bonds. Okay. Barclays Intermediate Bond Index, that returned in 2008 8.07%. Well, 5.3% was the U.S. small cap return. 0% was emerging markets. International small caps got 0.4%. So the move out of those categories into an 8.071 looks pretty good. What happened in 2009? 2009, that same Barclay Intermediate Bond Index returned 1.4%. U.S. small cap, 38%. Emerging markets, 46%. International small cap, 32%. And if you had made that move into that intermediate bond index because of the previous performance, you would have missed out on capturing returns from those indices. So I just want to caution you, I want to coach you, I want to communicate to you, own a broadly diversified portfolio. Work with a coach that's going to help you to rebalance that thing on the highs and remove the emotional, behavioral penalties that come by chasing the market like that. I'm Brendan Jenks, the investor coach, and thanks for watching.